Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, April 29th, 2024. It's 11:10 a.m. Eastern Time, so I'm starting the video, and here's what I'm going to cover. We'll make it quick. As I got out to you this morning, there is just a massive amount of potentially market moving and almost certainly market moving releases coming out this week, both on the economic calendar as well as the earnings calendar. So I'll get to that. I kind of mentioned some of the things in the earlier post. So I want to do an update on the market and just speak to, again, how it factors into at least my trading plan. You guys do what you want to do. You guys will do what you will do. So I'll just tell you from experience. As I said earlier, I tend to kind of throttle back a little, loosen up on swing trades, on stops to not get shaken out in volatility as long as the charts still confirm the positions that I'm in. So I'm going to do updates on the market. Particularly, we'll look at the Nasdaq. Maybe I'll touch on IWM. Sometimes I forget to include that in there. The VIX, volatility index, Treasury bonds, which we have both either or a pure play long right now, as well as a hedge to swing shorts, and that's both of those working out perfectly so far. Nothing big, but doing what they're meant to do. Wheat and natural gas. We'll probably cap it there. Those are the main things. Let me just dive in here. This is just kind of a recap of what I got out to you today. Here's that multi-month trading range right there. There was our breakdown candle right there. 2 days of back testing it afterwards, followed by a move down. Perfect tag of our T2. I mean, you can't really get much closer than that. Bounced as expected. Remember, I didn't expect much of a reaction on T1, but did off T2, so we gained the bounce, at least part of it. Like I said, I didn't think we'd get this high, but I was certainly in the realm of my upper bounce target, so we're there. And all I can say definitively is support once broken becomes resistance, and so that's 433. As I've been saying, and I just want to reiterate this, that it wouldn't surprise me. I even said before, if we get there, I can easily see them trying to punch through there. Them just being the nefarious forces, the powers that be, whether you want to say it's engineered or just the way things work out, they might try to pop us into that range. And so based on what I'm about to get to with both the economic and earnings calendar, we've had a lot of check marks. We had one, and that's NVDA, ever so slightly undone. But remember, QQQ, this is just TA 101. You break down, and sometimes you never look back. Sometimes you break down, whether it's a trend line break or a horizontal price support break. Sometimes you break down and then you back test the breakdown level. So that's it. I'm still looking for a move down here. And we can, get up in here this week with the volatility or not. I can't say. All I can tell you definitively is this is resistance, both the 50-day moving average as well as the that key 433 level. And as I showed you, which I'll get to in a second on the Nasdaq 100 futures, or we can do it here too on QQQ. When I zoom down on the 60-minute chart, you can see I had a purple line here, but there's the bottom of the range is better defined in NQ. I'm going to get to that in 1 second here. So I do have that level at 433. We're right there. We're right at resistance on QQQ. It's resistance is resistance until it's taken out. Let me toggle over to NQ. That's the chart I got out to today. This is a 60-minute chart, hourly chart, meaning hourly candlesticks. And you can see here my yellow line has been since well before it was broken down. It's always been there to 18,046. So about 1850. Seem to be a lot more reactions. Again, you can pick it up here on NQ because it trades around the clock. You don't see these trades on the QQQ chart. So that's why I was pointing out today that although 433, looks like and is the level on QQQ, these are the futures. And so they have, and that's only a measured at, and I told you in the post, it's only another 0.5% upside. So you can easily see that. And that's still just a back test. And then you have, if you get up in there, you've got various levels of resistance, including this downtrend line. So really, to give it a little room, again, if that is your thing, and if you want to have a hard stop out, you're going to have hard stop over 433. They'll probably get you, and you may or may not regret that if ultimately things go the way I think they're going to go. You also, the odds start to go up sharply as we get into the range, again, over 1850. 18,050 or whatever on NQ. And then especially if you go and you take out the downtrend line, it's going to increase the odds to go to the top of the range. And if that happens, then this whole thing would just be one big massive false breakdown, and that's going to be bearish. So that's not my preferred scenario, but it's one I'm certainly going to react to. I will not ride out a move, and swing short positions to new highs. I'll be scaling out within there. But again, I'm gonna get this video out to you. I might get another video or any static charts out today. I've got a friend coming in town. Weather here is beautiful, so we're gonna go jump on the boat in a little bit, and I'm gonna wrap up here, and I got a few errands to knock off first. So and that also kind of dovetails with what I said earlier. This week, we're about to go over that economic calendar is chock full of events, as is the earning calendar. And so if you sit and trade, or you're trying to swing trade, you're probably going to get chopped to pieces. Why? Because you're going to have, with that comes increased volatility, which leads to a lot of false breakouts and breakdowns, support and resistance levels. Again, I'm just telling you from experience what I've seen. So those weeks, there is volatility. If you're very nimble and quick, you want to trade off the levels. Let's say there's, as I go over these economic reports, let's say you see your futures trader, and a lot of the reports are 8:30 a.m. or even 10 p.m. 10 a.m. And if you have a sharp move down to support, and it seems near-term oversold, and the charts confirm, maybe you have some divergences, you can game a quick bounce. So again, if you're a very active trader and experienced, I don't have to tell you that. If you're not, I'm trying to speak to those that are kind of maybe new to the swing trading thing. Like I said, it's usually you get chewed up and spit out in a week like today if you're trying to, take breakouts and things like that until, especially the two big earnings are out of the way. We got Apple and Amazon this week. So, all right, so that's it. We're at resistance. So to reiterate, as all along, my plan was, short up to, but not above that level. And so it's not a binary thing where, okay, above it I'm long, below it I'm short. Just once we get above there, the recovery may be the real deal. So why? It's easy to just wait if we do this and then fall back below. And you're looking, if you have dry powder to add. Let's just say, for example, and there's nothing wrong with this. In fact, many probably should do this. Lighten up. You've got, I said it before, Microsoft and Alphabet. I made it very clear, me personally. I wouldn't go heavy short into those two earnings reports. It's gambling. It's just really pure gambling when you have not one, but two of the biggest stocks that have the biggest impact on the market reporting. And those things can go either way. So same thing holds true with Apple and Amazon and some of these others coming out this week. I'll get to that in 1 second. So there it is. Not much else to say. We're at resistance, a little bit more upside, about another 0.5% on NQ to get to the comparable bottom of the range level. That'd probably be this line here, about 433, about 434 on QQQ would most likely be the comparable level there with that NQ. Let me just quick update on IWM small caps. And they've been kind of sucking wind. Look at that beautiful divergence here on the 60-minute chart. There's the daily right here is my daily board. There's that big level there, that 199.70 level. So this is the big picture. If you're just catching up, we had this primary uptrend line off the October lows right there, gave us this big bearish rising wedge pattern with also long-term resistance here about 209 or 210. It was the bottom of the trading range before the small caps when they peaked back in 2021. And so it was a test from below. We're only looking at a 60-minute chart here, so you don't see it. Then a breakdown, back test, rejection, hit support there, hit the 200-day moving averages, like I think QQQ will do soon. And we've had a reflexive bounce. So it's an objective short entry. Again, maybe not anything crazy based on what's going on this week, but I just want to mention that's still zigzagging its way down. And before I leave the indexes and get to the economic calendar, remember the VIX, this is the spot VIX index, coming off that divergent low, still in an uptrend despite the recent rally. And again, so there's zero evidence. This is a bounce. The rally that I'm talking about now that started last week was 110% expected. Remember, covered shorts, we went long on the bottom, and I didn't want to try to milk out every penny, so I started scaling back in, closing those longs, scaling back in short a little early, and now we're at the max, my uppermost expected bounce target. Not the one I held out for, but the one I could, that would be the back test of the 433 level. So likewise, I just wanted to point out there's been nothing from the indexes that have negated the recent sell signals. And all the sectors, all the top 5 sectors in the S&P still well below their breakdown levels, which we got those check marks over the last few weeks. And then this is the VIX just stair-stepping higher, and so far making higher highs and higher lows. And that's what it tends to do. You see, you usually get these big moves. And VIX is it's by nature, it's super volatile. It's a volatility index, but even in itself, it's and then you get sometimes these, it's never a linear move up. And so, like I always say, too, to trade the VIX, you could, and I did, sidestep when we hit T2, that was right here. It's not mere coincidence. I've said this often. You can blindfold me, only show me the charts of QQQ or SPY, and I'll trade the VIX, successfully if my call's right on the indexes. So that was, what was that, 19th? And QQQ hit T2 on the 19th, and then we had a second test of those lows that was Friday, and then also on Monday right there. And as I said to somebody recently, and I mentioned this, and I covered closed my VIX on Friday, and I covered this in a video recently and posted as a comment section. As someone asked about trading the VIX, and I said, from my experience, the VIX will peak first, and then the stock market will bottom right after that. So when you're trading the VIX, that is the one instrument. You don't want to be the last guy or gal to leave at the party, or the game of musical chairs, the one standing when the music stops. So with the VIX, if your timing and your plan was to close out at T2, you wanted to get there and not wait. You had a second chance there on Monday, as I pointed out, because we tested that level. But that's when the VIX peaked, and you can see it when we go back to it. It started to drop pretty quickly. So if you waited until Monday, from the high to low, it had already fallen from the peak. This red candle here where my crosshairs are Monday, that was down about, even to the top of it, about 12%. And so there it is, and still in an uptrend. And so nothing has changed in my intermediate to longer term outlook of the market. The only one thing that I've noted, remember, Alphabet, it never gave us a sell signal. Alphabet, Amazon, and Microsoft were the 3 holdouts, really. NVDA, like I said, volatile stock, took out the 840 and regained it last on Friday. But we're right, and again, as I said, we closed right in very close proximity to that downtrend line, which was a hair above, and we're just a hair above it now. So on a related note, I'm going to cover a few earnings, and we'll get to the calendar in a second. But SMCI, this thing almost mirrors, I call it, the sidekick to NVIDIA, and they are reporting this week. So not NVIDIA, but SMCI. So that might give us some insight into the sector, and so that one I still have a price target down here of 355.60. All right, let's go to, let me do this. Let me just give you updates, and we'll get them out of the way on natural gas and treasuries and wheat. And let's start with natural gas. Okay, remember we rolled to the Junes. The Mays are no longer trading. I'll get to UNG in 1 second for you ETN, ETF traders. That's the trend line that I have, and I can also, you can play around because there's a couple spikes here and here. But what's most important to me, natural gas isn't going up, but it's not going down either. We keep holding here, and I mentioned a while back, and I haven't updated, and I don't have the chart queued up, but I've shared a couple weeks back a long-term, multi-year, multi-decade chart. We're down around the low end of a range. It's long-term support, and it's also near-term support now because this is a 6-month, 2-hour chart, and it's about 1.9. I have it at 1925. We keep hitting that level. And we've had a couple punches up, and we've hit, we've had an opportunity to sell there. To that first target was hit to the button to 2.14 roughly. And so you can still, trade it. Now that we hit it again, remember, this was these reactions right here. Now that gives us these multiple reactions here, another one right here, and the one we just hit. So that's the magic number right now. So, there's 2 ways to make, for me, to make in a case an objective long entry, either a pullback to support, if you believe that support's going to hold, or a breakout above resistance. So now you've got this nice little range right here. Boom, pop above that, natural gas should rocket, in my opinion. You got the downtrend line, you got big positive divergences. And like anything, don't fall in love with it, especially natural gas. I call it the widowmaker for reasons that I think if you've traded it, you will know. And this is how it looks on the daily chart. I'm sorry, 60-minute chart of UNG. We already hit my first target there. It was long-term support. We hit it again. And, UNG, it does its best, but it's rolling futures contracts. And so, we're trading. I trade the actual futures, but this is for those that don't. That's why I cover this. So you're not going to see the same levels. So that's why I recommend watch, even if you don't have a futures account, watch the futures. Most brokers, including Schwab now, which former Ameritrade, the Thinkorswim platform, will give you futures quotes and charts. Live real-time investing.com will give them to you as well. Real-time futures for natural gas. You can chart them. And then, so that's it. So pretty much a pop. I guess if you had to extrapolate it and correlate it, it would be a pop above that high. Should open the door for T2, T3, and T4. So there's your update on nat gas. Still very much, like it. Don't, I'd say like it, don't love it, but in it. And, and it's been choppy. You want to keep trading sooner or later. Like I said, I just gave you the level where I think if it breaks that level, it will run back on nat gas futures. Until then, you can trade the range if you want. Buy the lows, pullbacks to support, sell the rallies up. But sooner or later, this thing's going to break one way or another. And I think that's going to be sooner. We'll see. The other one, not the other one, but one of the wheat. I told you on Friday, I always say, said it 100 times, no, thousands of times, the targets that I list now are the actual resistance levels. Two things. Number one, correlate with the futures. That's my preferred trading vehicle, ZW. Remember that wheat, when you're trading wheat, it's tracking the futures, but stop trading every day. I think it's like 130 or 230 or something like that. So you got to, it's going to kind of flatten out at the end of the day, the ETN here, because the futures aren't trading anymore. But we hit, and I always say you want to sell a hair shy of the resistance level you're targeting. And so that was, when I posted it, we were right at that high of the day right there. And I told you that the target was hit. It was 594 versus, the line at 596. Certainly close enough for government work, and where you should have pulled the trigger. I told you reaction was likely, so but I bought it back. I bought back in today. I sold it on Friday, right at the highs. Bought it back today. So you don't see, and I'm covering it now because you don't really see much support here on the 60. See, this is a big level, and I've been saying it for a long time. 607 needs to pop, which is about $6, but on that 60-minute chart, 607, and that will open the door, and that'll be a powerful breakout. If you don't see it here, you've had this trading range here, you broke it, but then you snap back into it. So from my experience, this is the false breakout, or false breakdown right here, and now if we pop that high, it's really about 607. That should really open the door to a longer, more powerful move up, I think, to hit that fourth target. I may add additional targets there. So here's the futures. That's why I re-entered. I had a level. This chart was posted before. There was the downtrend line. There was a breakout. That was a divergent low. It was stair stepping up already. We already had an entry back here somewhere. And there's the breakout, and then boom, that was that 629 target I gave laid out in advance, and that was hit and then some on Friday, and providing an objective long entry. I'm sorry, an exit. And then here's, and then we went on to take out that minor uptrend line right here in purple that I gave you. And now, so this is it. This is the first support level. And because I'm, longer term bullish, I don't want to try to milk. We can come all the way down here. And I left some room to add. I had, more contracts I sold there. Took about a 3/4 position. It's almost full position back here. But I've got enough powder to add back. And because the charts continue to firm up, I like the price action recently. I might even increase the position size, scale down to, but not below this level here. You can see this was that kind of consolidation area and a breakout right there. So down to, but not below much, about 585, 586 to about 580 right there. That would be I would stop adding at that point and be more concerned about stopping out. So I prefer to see this. And again, I'm not going to hold out for a little more. And if that happens, I have room to add as well. And if that happens, I have room to add. So that's my scale down to, but not the low point. Kind of like with the, the Nasdaq 100 in reverse, scale short back up to, but not above 433, that kind of thing. Just sit tight for that point. And then if it continues lower, scale out. So, and it may want to even go for a back test. Remember, there's also a trend line which hasn't been back tested yet. But problem with trend lines, they come in at lower and lower levels every day. So you have to kind of look in advance, how far down are you willing to let it go? And even then, if it goes to back test, there's no guarantee that the back test will stick. But all right, so that's it. Let's just, TLT. Let me cover Treasury bonds for you. Okay, this is ZB. This is the chart I got out to you last week. We entered, turned out so far now, look, it's not a monster trade. You got a little minor uptrend line, but we nailed the bottom. Now it's, I think the low was, that's where I posted the entry at 112.280 right there. And again, it was both a pure play long based on the charts, meaning if you don't agree with me and you're not short the Nasdaq or don't plan to be, you're just looking for a trade idea, then you can do this. But also, if you are short, like I said, it's also can be used as what I call an indirect hedge. Those are my favorite because a direct hedge is going to offset one. You're going to lose on the position you're trying to hedge, and your hedge should go up like puts or calls against a long or short position. But an indirect hedge, for reasons that these guys are very much related, should work in tandem if they do play out right, and then that's the best of both worlds. So this has been going up, and it's also, like I said, a double-sized position gone to offset any give backs that we've had on a QQQ swing short position. And so far that was the first target. Remember the trend line. I had arrow breaks at the trend line. 114, 300 right there. And so far so good. Nothing big, but again, it's going in the right direction. We're up a couple percentage points. And again, that's with a double size plus position, because they're treasuries, that would be easily more than offset from where I posted it. Remember, we were along the Qs, the beginning of the bounce, or at least I was posting those reasons. And so profiting from the bounce in QQQ, then towards the high end, when we got to where I started scaling back short, that's where I put this one out. And so far, so therefore it's washed out any losses or givebacks on those trades if you re-entered that. So working out, at least for me, perfectly. Okay, let's talk about what might move the markets this week. This is the right side of the chart, and go up here. You click on resources at the top menu of the page, and it'll bring you down here. I use this all the time, tools of the trade. So you've got earnings calendar and economic calendar there, of course some other stuff. And let's take a look at that. Let's start with the economic calendar. I'll zoom in for you here. Nothing really much today. Let me try to zoom. Here we go. Scroll up a little bit. Okay, so tomorrow, some of these, the red ones are the biggest potential market movers, but there's a lot of stuff here. You got employment cost index, Case-Shiller tomorrow. You can see everything, the start items. Red's a little more significant, but sometimes the green ones can move the market. Treasury refunding announcements, more something I used to not give two flips about. Nobody did for decades now, because we didn't have a debt problem. Right now, we have an issue where as you know, our interest expense for the federal government is the Treasury has exploded now with these big, unexpected move in rates. So you've got, we're running a wartime deficit for the first time ever in peacetime. We're technically not at war, although we're funding a couple right now. But our deficit is ginormous. God forbid, God help this country if something really comes off the rails, because the deficits we're running now, coupled with the huge increase in interest expense, meaning as treasuries come due, the Treasury has to issue new bonds, but now they're to pay off the old ones. It is a Ponzi scheme. You can call it what you want, but then it gets expensive when interest rates are going up. So what I'm getting at, the market's watching these things now. ISM, that's always a big one right there. That's Wednesday. And you can see jobless claims. Market's going to watch that. Factory orders. There's just a whole bunch on there. Oh, let's of course get the Fed announcement as well. And then really what's going to move things too, they'll give the initial statement that can do the trick, but then usually you get the volatility here, up or down or both ways after Powell speaks. And as I said, the initial reaction quite often, we learned that well. I told, been doing this for a long time. I always warn you, the initial reaction's quite often not the one that sticks. It can be. The initial reaction on the last FOMC announcement, if you remember, we ripped right up. Nasdaq punched out to the top of the trading range the day after, so it was not even a 1 day plus, 1 day and 2 hours, not even. It was less than 24 hours, and we shorted that high. That proved to be the high. It proved so everybody that jumped in and the market ripped after the FOMC meeting last one. Well, we know what happened. The Nasdaq turned around from that point and dropped 8% and wiped out that little 2 or 3% pop, which just brought the bulls out of the woodwork. And then boom. So anyways, the same thing happens with earnings too, guys. Like I said, and it's not, when I say the initial reaction, it's not instant. It's not at 2 p.m. or even 2:30 when he's talking. That one took about a few more hours the next day to fully play out. And so you need to let the market digest these things. Sometimes usually takes at least a couple days, sometimes a week or so. And so that brings us into the next thing. So let's talk earnings and we'll wrap it up here. QQQ. So we know we already had Alphabet last week. So far, again, there's your now look, it's still well up from earnings, but so far they're selling, they're fading the rally, re-entered the gap. I'm talking about Alphabet. It's back into the gap. It's got a long way down, and I mentioned it last week. If this, I would rather be long Apple, Tesla, those two, and short Alphabet and even Microsoft, those that are at their highs, as maybe an arb trade, and so you can see both those Apple and Tesla are vastly outperforming Alphabet and Microsoft since their earnings. So I'm just doing a post-earnings wrap on them. Where's my Microsoft? Here we go. Microsoft also fading. There was Microsoft pre-earnings. I told you that false breakdown right before earnings. There's the earnings pop. It wasn't much, pretty muted. And look, you can see here, talk about the 50-day moving averages. Is a key level on a lot of stocks. That's the yellow line here. When you're above it, that's bullish, a bull trend. When you break it, then that's bearish. The algos will fire off sell orders. You broke it, rejected on 3 attempts, stayed below it. Finally, a big green candle through it. When you're above it, it acts as support, and then after they could see 2 weeks of successfully testing the 50, tested it there, broke it here, breakdown, back test, pre-earnings rejection, post-earnings rally into it, rejection again. That's where we're at. It's not the be-all, end-all. It's just a level to watch. To me, the big level remains 397. And so far, they have now faded almost 100% of Microsoft's post-earnings pop. So therefore, again, as I said, don't read too much into the initial reaction. We'll know. Well, I'll tell you what. We'll know after Apple and Amazon which way these guys are going to pick. And I can all but promise you, I can't make a complete promise, that if the market doesn't like what Apple and Amazon collectively are selling, and again, going after, the day and into next week, and those guys start tanking after earnings, it'll drag Microsoft and Alphabet down along with it, kicking and screaming with those two. And it goes the other way too, guys. This is still above support. So maybe the market loves what Apple and Amazon are selling and some of these others, and support is support until it's broken. So then you want to watch if you're bullish, I should say, then you want to see a break above 430. That would be pretty bullish. I can tell you right now, based on the big divergences, breakout I most likely won't be chasing. It's a breakout that I'm talking 5 steps ahead now because we're closer to support. If we broke out, the big divergences that have been in place will only be bigger, just like they were on the Nasdaq 100 and most likely lead to a false breakout. But let's take it one day at a time. That's what we'll do here, guys. This is not going to happen today, tomorrow. Any move above 430 right now, since we're closer to support, that's the level I'm watching. And again, if it broke support today, would I short Microsoft individually? No, I already, like I said, my plan is right now trading the futures, not any of these individually. And I would take it with a grain of salt, because what Apple and Amazon do this week can over, I can either build on or negate another breakdown here. So now we're kind of, like, I'm just trying to tell you, anything that happens this week till the week is over and we start heading into next week, take it with a grain of salt with everything on the economic calendar and earnings calendar. There's Apple. I told you Apple most bullish of the lot right now. Apple and Tesla, little break, false break below that key 166.61 with a divergent low, still moving up. And so, that's the one I said, this one and Tesla were the two that you can buy and, hedge, even more of a direct, but still kind of an indirect hedge against the Nasdaq 100 because these guys should outperform. Outperform means either go down less or go up more than the Nasdaq, and that's exactly what they're doing. The other one I gave you was, of course, Tesla, and Tesla off that divergent low so far has rallied about 40% almost. And so took out the trend line and coming up on big resistance. So if you grabbed it, wish I could tell you I did. You've got reaction anywhere from about 198 to about 205 is where, and then the 200-day moving average right here, exponential, and then the simple. Yeah, the upside is limited on this one. I would be right now putting a tight trailing stop if you want to try to milk out a little bit more, but that's probably it for the time being. If the market can break out to new highs, Tesla will probably come back to its bear market downtrend line, which is this uptrend line right here off the 2021 highs. So that would be a potential target, but would most likely need to see QQQ break out above the recent trading range to see that happen. NVDA, I already covered that. Still flirting with the downtrend line, so pretty much at resistance. It would obviously help the bearish case to see it get below 840. To do that, its little sidekick is reporting this week. I'll get to the earnings calendar in a second. SMCI still below its comparable downtrend line right here off the recent highs. And there's that price target there. Which one have I missed? Let's talk Amazon. Amazon. Remember, it hit my key yellow level last week on Thursday, 165.74. Bounced off there in sympathy with Microsoft and Alphabet after their earnings. However, and I'll still play the game that I play earnings season. I'm calling this one down post earnings. So far, I've been 2 for 2. Well, Microsoft's not gone anywhere, so that's kind of and again, we're only a couple days after earnings, so it's not really gone up. And it's not really gone down, relative. I'm talking a couple percentage points. So that one's yet to be determined. So called Caterpillar down, called, what was the other one? Oh gosh, I'm forgetting. Whoever else already reported. But here's Amazon. Amazon broke down from this bearish rising wedge. You had a divergent high, breakdown, hit key support. And again, that in itself would have been a profitable trade. It's down 12.5% off the highs. Okay, sorry I had to pause it there for a phone call. I was talking about Amazon, and again, Amazon is already broken down, hit support, pretty good move down so far. Again, time may change this, but it's nothing more than a initial leg down. Well, we had one there, zigzag down, or you can say that's the first leg down and a bounce. And this chart as well, especially when I go out to the weekly charts, indicate more downside. Again, Amazon, just like QQQ and a lot of things, looks to me like it's time they need to come back. And even if they're going to remain in a bull trend, again, that's just initial targets. Come back down. You can see here the blue and red lines. I believe you can see it in the video. They're right above this uptrend line. And that to me is a magnet of a price target, whether it's going to happen soon or we get another marginal thrust up and then we go down there. You can see you've got divergences here on this weekly chart. And just to measure it out for you, that's going to be, if it happens soon, if it happens post earnings, you're talking about a 14% drop in Amazon. So if that happens, it's all but guaranteed the Nasdaq one. You're not going to see Amazon drop 14 and see QQQ hold up or go up. So that will most likely fall. So that's Amazon, and the other big one again is Apple. Apple, again, at below this long-term, the purple long-term uptrend line comes all the way back off the 2003 lows, but it also is above support of the daily. Like I said, I wouldn't bet. I'm not even going to make a call on this one. As I say, typically when the chart is more bullish than bearish. This near-term chart, it was bullish recently, and we've had a nice bounce, but look where Apple's coming up on the 200-day moving averages. These blue and red lines right here, and they're both, you have the simple and the exponential right there. They do a great job of defining the trends. When you're in a bull trend, you're above them, and you want to buy pullbacks to them. They define the trend as bullish, and then once you break it, the trend is bearish. Last time we took them out was back here in 2022. Back here in 2021, you took them out. And you took them out right here. Let me get my tool. Took them out there. Let's do this tool right there. We had this. We remained in a downtrend. It was well into the double-digit drop. Things got choppy here. Apple actually punched above them briefly here, but fell below. But I've followed Apple for a long time. It does a really good job of, behaving, if you will, or having the trends defined off these 200s. Not perfect. Sometimes you slice through. And again, I take that in conjunction with everything else. Apple, and I'll give you a good example of what I'm talking about. Back here, this was, where am I at? Daily chart. Apple, back here. Last year, you can see, I'll turn all the lines off. We were below the 200s, but we went long Apple right there. It was one of my top picks. I put on as a long trade because everything else at the same time, most everything else, so the top thing, I'm talking the Mag 7 and the market in itself, the major indexes were at the 200s and or other support levels. So that pierce below Apple, I suspect it would be a brief punch below, and it was. And Apple exploded off that level, which again was horizontal price support, the key purple line. And so there's a good example. So it's not what I'm trying to say, it's not a hard line brick wall. It's kind of in a proximity. And you can see here, we didn't just dip below it. We've been below. We broke below right here. We tried to back test, rejected, back test, reject, and we remain below. So if Apple gets above here, and the market is looking good, and QQQ gets back above 433, then yeah, you wouldn't want to be shorting Apple. If anything, you want to go long. All right, so that's that. What else do we have? I already covered. Okay, besides the Fed meeting, the Fed announcement, and that'll be, again, it's about what the Fed says. You have jobless claims, employment situation. That's the economic calendar. Earnings calendar. Let me just go back to the beginning of the week here. That's also in the tools of the trade. This is today. You can see here the companies that reported this morning. And then you click this forward. So tonight, right there, nothing market moving really. PayPal, we're on Tuesday before the market opens. McDonald's, couple big ones there. And here it is. So we get to Tuesday after the close. Amazon, AMD, and SMCI. So you've got one of the biggest semis right here. Let me color it up. AMD. You've got one of the biggest of the S&P and Nasdaq 100. Of course, Amazon. I don't have to tell you how important they are. And then SMCI. And that could give us a little color to maybe NVDA, because they're not going to report for a little bit here. And so market might be watching, even though it's a much smaller company. Again, it's kind of had that whole AI theme going on. All right, we go into Wednesday morning, Pfizer, MA, MasterCard. That's always a kind of a insight into the health of the consumer, potentially, so we'll watch that one. On Wednesday after the close, Qualcomm, Carvana, that's an active short trade on the site right now. So just heads up. We've got Novo Nordisk on Thursday before the market opens, Peloton. And then Thursday, there's Apple. So this will kind of, the market's reaction will be known on Friday. Again, as I say, don't, overreact what happens post earnings. Sometimes it does stick, the immediate reaction, but you have the earnings announcement, then the conference call. And I've seen so many times and look, by the way, Apple and Amazon, they almost always beat, if not blow away expectations, because they are they're in a $3 trillion. Each of these companies are $3 trillion or close to it. The amount of money they have managing earnings expectations down to a science. So if they beat, sometimes you even see them miss and then rally. I think didn't that happen to Tesla recently? Yeah, I think that was the one that missed top and bottom line and still rallied. It's all in my head. It's kind of juggling around right now. So many companies reporting, but either way, it's the market's reaction, not what the company reports, that's most important. All right, so I will wrap it up here. Again, not sure if I'm going to be able to get in front of my computer today to get anything else out to you, but you know, I'm kind of status quo on most swing positions right now, and expect some volatility with the economic calendar earnings this week. And I will be back at my desk tomorrow, and we'll certainly get something out to you in the morning if I don't follow up with anything else later today. This has been Randy Finney with Right Side of the Chart. Have a great day.